All right. So today is Thursday, if you guys haven't noticed. And your homework is to choose 2 to 3 stocks that you're interested in. And we will examine those stocks next class. So be prepared to share one of your examples. Can you guys type it in the chat again? I think it got deleted. Just post the stocks that you want to share, and we will get to it later. So while you're doing that, what are your thoughts on the video? Iris?
I have a question. It said like 15 to 20 was technical, so like what's the other percentages?
I didn't really hear you. Could you type it in the chat? While Iris is okay. So in the video said 15 to 20% was technical analysis. What are the other percentages? So basically, technical analysis goes along with fundamental analysis. So you guys know technical analysis is basically looking at stocks, charts, and prices. Fundamental analysis is basically like, a technical analysis is the ceilings and floors. And fundamental analysis is looking at how much the company makes over time, or how much money it loses, or what it's doing with the money. And financial analysis will take up the rest, like 80 to 85%. That's a good question. We're going to cover fundamental analysis next class, or next video, and we're also going to discuss this class as well. So anybody else? Let's see, Ethan?
I didn't finish the video.
Okay, so I'll post the link in the chat again. And you can go watch it, I guess. In the meantime, let's see, Candace? I don't think she's there. Well, how about, wait, are you there? Oh.
Yeah.
So do you have anything to discuss on the video?
Not really.
Is there any questions you have?
What technical analysis tools are there?
To the tools?
Yeah.
Yeah, so, well, wait, I think tools, did it say like tools had to be like memorized and stuff? So basically, I think what the tools I mentioned were basically stuff like Bollinger Bands and like trailing averages, basically stuff that you can see on a graph. And like drawing lines is a big tool. Like ceilings and floors, those are tools. And basically a tool is anything that helps you detect stuff in a stock. So there's a lot of them out there based on mathematical concepts, and you can go look them up if you want. Good question. Anybody else? How about Alvin?
So one thing that doesn't really matter, I noticed, is I used the same picture a few times, but anyways,
yeah, I
for
I
like
was pretty lazy.
something else, yeah, in the end, you talked about how what was it called again? Like technical analysis should only represent a part of your analysis. I think I agree with that statement. But I think that maybe a little too little, I guess. Just a feeling, no real reason.
Well, that's what I thought at first. Sorry, I choked on water. So that's what I thought too at the beginning, but basically technical analysis can be pretty wrong at times. Like yesterday, there was a time where I was showing you guys a stock and I said, huh, this looks like a good buy. And then I kind of zoomed out, then zoomed back in, and zoomed out, and then I realized that I was wrong. Because, you know, technical analysis should not always be trusted. That's why if you use technical analysis, you should have financial analysis to back it up. Actually, on most of the websites, it said 10%. So just take it with a little caution in mind. So great question. If you guys have any questions like these, you guys should definitely go and ask them. It's not like school. School is not fun. This is fun, I hope. Let's see. One more. James? Did I already call on you?
No.
No?
I don't actually really have anything.
Mm-hmm.
So
Is there anything that you would like to talk about in the video?
really, but
Is there something you want to know more on?
no, I actually don't really remember much about the video anymore.
That's all right. You can always watch it later. Get me some more views.
True.
Or just have like 18 of them playing tabs in the background.
Oh, what?
Or you can just watch it 18 times and while you're doing your homework or something.
Okay. Oh, by the way, I don't actually have homework because summer break has already started for me.
What did you say?
I don't actually have homework because summer break started for me.
Oh, good. Well, so you can watch it while you're like playing games or stuff. So, okay. So moving on. Tomorrow's video will cover financial analysis. So in our activity today, focus more on technical analysis for now. So good stocks make money. How do we find good stocks? I'm pretty sure you guys have seen this before. We're going to dive even deeper into this one. So even though the market is known to go up by 7% every year, finding a stock that will get you return is like searching for a needle in a haystack. So 7% isn't much, right? But if you don't think about it in monetary terms, 7% can actually be a lot.
Well, maybe I think 7% could depend because, like, if you're going up at max, so it's like 100%. Well, then that would be like some. But like, if you can go over 100%, then it would probably be a small amount.
Yeah, well, 7% basically means that if you invest a Nintendo Switch in a stock, you have enough money to buy toothpaste, a set of crayons, cookies, cheeseburger, a board, a bag of combos, 4 plastic measuring spoons, jar of rainbow sprinkles, Taco Bell triple layer Doritos, and 18 cans of cat food. Basically, $21. What can you buy for $21? Oh, that's interesting. But basically, 7% can be a lot, but it oftentimes isn't enough to satisfy your needs. So yes, there are ways for you to literally choose stocks at random and make money, but that doesn't always work, and it doesn't have much return. There were scientists who tested out this method. So they got random stocks. They had a method. They put 50 stocks, random stocks, on a dartboard. You know, they labeled them like number 1 is going to be this company, number 2 is going to be Microsoft, number 3 is going to be Apple. And then basically the board is like Velcro and stuff, and you do that by like throwing, it was like Velcro covered ping pong balls at it. and you guys get, and then you see like where it lands on. So they brought in a couple monkeys, then they had the monkeys throw the balls at the board, and they invested in the stocks where the balls landed. And believe it or not, they made money. Like, this is an actual story. Monkeys investing stocks and making money. But it doesn't have much return and it doesn't always work. So stock analysis is important if you want to find the real shinies in the grind. Just another way of saying a diamond in the sand or whatever. Financial and technical analysis are two of the most important ways to analyze stocks. So financial analysis, you guys did not see this yet, but it's the process of evaluating businesses, projects, budgets, and other finance-related transactions to determine their performance and sustainability, suitability. So it's just evaluating. I have the hiccups. Technical analysis, you guys know about this already. Analysis methodology for forecasting the direction of prices through a study of past market data. So basically, it's using the past to determine the future through charts. So first up, technical analysis. This type of analysis only makes up about 10 to 20% of most people's analysis, but it's still important to analyzing stocks. Basically, we look at graphs and we draw lines. Using those graphs, we use concepts to judge the stock's goodness. And that's basically all there is to technical analysis. But these concepts usually are needed to be memorized or to be checked back upon, like looking through a book, such as the cup and handle, like this one up here, head and shoulders, this spiky looking one, and the consolidation pyramid. Consolidation diamond. So basically, you guys, there's a lot more of these shapes, but these three are the most common. And you guys don't have to memorize them, but if you guys see a diamond, like a head and shoulders or a cup at the handle, it will probably go up or go down or go somewhere, depending on which one this is.
Well, I don't really understand why you would call that a diamond, because I don't really get where you get the diamond from.
Well, the diamond, it kind of looks like a diamond because it's like a rhombus.
No, but like where? Because like the lines inside of it don't actually look like they grow and then they fall.
Yeah, that's like what a diamond shape is.
Yes, but like it doesn't really form that shape.
Well, a diamond shape is like this.
Yeah, I know that.
This. You can see how it kind of makes the diamond shape.
Oh, like the lines inside.
The lines, so these lines, like the line in the middle. So basically, you do that by connecting the tops and the bottoms. Like, you can't see this, but it's called the bars in the candle graph. And it's a little advanced, but basically, you just draw it from the tops and the bottoms.
I get it, kind of.
All right. Well, basically, for this, you have to draw connecting the top, a single line connecting the tops and the bottoms. And then if it makes a diamond, that means it is consolidating, which means it is stagnant. It means it's not going anywhere. So financial analysis. Financial analysis is a bit more bookkeepish. You're looking at a lot more like sheets of large numbers, like making calls, you know, what you would expect from a person working in Wall Street. Here, what we look at is how much money the company is making, what they spend their budget on, and what they are doing to make money. So how do we do this? We take a look at their financial statement. So the financial statement is what I referred to when I was talking about bookkeepish, because it's got a lot of large numbers on it. So it's the quarter annual. That means 4 times every year or once every 3 months. It's a report every company with a stock is required to output to the public, stating their revenue, income, ED ratio, PE ratio, net earnings, and a whole lot more. So basically, the revenue is how much money they take in. Income is how much money they have at the end of paying everything off. ED ratio is how much money they have divided by the how much money they owe somebody. PE is the price of the company divided by the earnings of the company. And net earnings is just how much they earn. So richer investors can literally call the CEO of the company they are interested in and ask questions about the company directly. Like if I were a really, really famous investor and I wanted to go invest in Microsoft, I would call Bill Gates and I was like, "Hi, Bill. How much money are you making right now? What are you guys doing?" And stuff like that. But us poorer people can't do that, so we take a look at their income statement or their financial statement. So analysis in action. Let's see financial and technical analysis in action. So we're going over here. What companies are we looking at? Let's see. First one, Costco from Iris. Oh, okay. More goods. Where search? There you go. Costco. So here we have their graph. And we can see it's in a recession.
Oh wow, it's been growing. It's kind of growing and then it fell and then it grew and then it fell a little and then it grew really high and then it fell and then it fell a lot and then it went up and again and look, it's kind of going down. It looks like it's coming back and up again tight.
Well, don't just look at where it's going. Look at what it's telling you.
I know because like it's going up down.
Do you guys see these little circles?
Yes.
So you see how pretty much after every circle there is either a big dip, that one's not really big, or a big rise. You guys notice that?
Yes.
Especially this one. So those circles represent their financial statements. And that's literally how important financial statements are. There we go, dark mode. And financial statements basically tell you how much they're earning, how much they'll probably earn, and how much they're going to make. And so basically, you know why everything has a price? Because it's worth that much. And so why stocks have a price, it's not just because of that, but why people wanting them, it's because what they can do as well. So what they can do basically is make money, but some stocks have dividends, which means how much the company earns, a little bit of that goes to you because you own a little bit of that stock. So let's do a little bit of financial technical analysis. Draw lines. There. And there. So, oh, it looks like it might be a good time to invest now. And keep that in mind. So you see how this part is going up? If it goes over here, no fear. But if it goes here, you should probably have not invested, or if you did invest, you should probably hold on to it because it's too late to go back. But wait, it may come back. It sometimes comes back, but if it drops too low, Like that is not a good line. Hold on. If it drops too low, then you should definitely consider selling it and just like not investing it anymore. But usually that stuff never happens. So let's see. Can I zoom in?
What is this? 1 minute?
Yeah, each one of these bars is a minute in the last hour or so.
What is it? What bar?
Hold on. What? Where is it? Hold on. Where did it? There it is. Now let's change it to every month. Maybe that's a bit too much. Let's change it to every day. Ah, there we go. So you see these bars?
Yes.
Basically, each one of these is whatever I say it is. If I click on a day, each one of these bars is a day. If I click on a week, each one of these bars is a week. And you see how there are green and red bars?
Yes.
The green bars mean the price has gone up. The red bars mean the price has gone down. Let's zoom in a bit more. So you see this bar? It's a green. So that means the price started here on the bottom and it rose up to here. And for this red bar, it means the price started there and then dropped down to here for that 1 week. So you may have noticed these tails and the wicks. So you know how the price doesn't just go up straight or go down straight. It fluctuates. So if it starts here at the very bottom, it goes, so basically it just moves around here, and the highest point it's gone is here, and the lowest point it's gone is here. And so then it goes up to here. And same for this one. It might drop all the way to this lowest point and then go up high to this high point and then go down to where it's supposed to end. And so if it starts and ends there, then why aren't these bars lined up? It's because it's for the day. The stock market is only open from 9:30 to 4. Well, Eastern time. So there is some after hour trading where people do not use people sell it basically not the way that it usually is. But basically, it's affected by after hour trading as well. So Costco is a good stock to look at, maybe. So let's also look at their fundamental data. Ah, there it is. So you can see their DE ratio. That means how much debt they have compared to how much equity they have. Equity means all their stuff put together. And wow, okay, so they have a debt equity of 0.4. That's pretty low, actually. So that means they have $4 in debt for every $10 that they have in their wallet, or more precisely, $4,405 for every $10,000 they have in their pocket. And dividends paid. Ooh. Altogether, they basically, a lot of people lost money last year. But this year, they pay 0.7692% of their money. And they pay like $12.98 every $12.98 every share. So their earnings per share is $11. So that means if their earnings is 11, then their shares is 1. So actually this would be how much if you bought the entire stock. It would take 11 years for you to make money. But that's not the way with stocks because the stocks is split up. That's the earnings. That's the basic earnings per share. Wait, no. Oh, sorry, guys. So the PE ratio is price divided by that. So 3.571 over. So earnings per share is how much you earn over how much it costs per share. So basically, where did it go? I can't find it. So basically, if Costco made $4 million a year and divided by how many shares do they have on the market? Probably somewhere around 2 million. So that means every stock you earn $2. And if we divide that by say 11, they're earning, wait, yeah, if we have 11 divided by 2, which is how much their share costs, then 11 would be, it would take 5.5 years for you to make money because it's the earnings per share divided by the price. So what is the PE ratio? Costco. It's on the sheet. No. Costco's PE ratio is 36. It would take you 36 years for you to make money if you bought Costco. If it's going the same way it is now.
Really?
Yeah. Well, to get all your money back, first of all. So let's see, what do we have next? NVIDIA. Wait, hold on. Isn't NVIDIA the Wait, it is. Oh my God. I just noticed that.
What is?
NVIDIA is it makes GeForce RTX. It's so funny because that's used in a lot of memes. It's a whole lot of memes. Huh. 1 month. Oh, that's the problem. I just need to drag out. But anyway, let's set the range to let's see. Wrong one. So to 100 ranges every month. So we have this. Oh, your dad used to work there. That's nice. So right here, we can see this is each month, I think.
Huh?
Wait, I have no idea what's going on. There we go. So this is each month. This is the last 3 years. So it doesn't look like it's been doing too good since April 1st. So yeah, I can see this big negative candle over here. There's also been a rise. So let's see. Let's do a bit more technical analysis. So normally I wouldn't try to go for a stock like this, but basically, because it doesn't look like it's going to do too well. So if you had this going on, see, it looks like the trend might be increasing, but it's hard to say for sure. Just not good lines. That's a good line. So you see we have this kind of scone shape. So that's a little bit of uncertainty, but we know that's facing upwards, so that's good. And we can also see that there's been a big rise here and a big drop from here. So let's see. Oh, so that is from, wait, hold on. Let me put it back in place. So that is from 2nd of May from November 20. So it's been dropping for the first year and a half of this year. And I guess it could be because of this financial statement over here. Financial statements basically, if it's going up and basically if the financial statement doesn't look good, the stock won't look good. If it looks good, then the stock will look good. So I guess the financial statement didn't look too good because it dropped a whole ton next month. And see, all these financial statements are accompanied by either lots of upward motion or lots of downward motion, like this one. And so you can see down here, these bars. These bars are volume, not like the volume in like a sphere or like the volume on your TV or stereo. So just like the green and the red, they mean positive and negative. And so volume means how many people are selling or buying the stock. So we can see here that can we go see the I don't think so. So basically over here we can see that its volume is a little low and there is more people selling it than buying it because it's red. Over here we can see that there's more people buying it than selling because it's green. And basically this means negative and this means positive. So next, the fundamentals. Okay, so let's take a look at their income. This is very badly made. Hold on. NVIDIA financial statement. Oh, see, it's even on the news. Like, is NVIDIA a stock you could buy after its earning hit? Over here, we're on the website. 2023 Q1. It means quarter one, like it's the first 3 weeks, like the first season. Okay. So its revenue is 288. I think that's supposed to be in like, oh, it's $8,288,000,000. So that's how much the company made out of everything. And so this is operating expenses, how much they use to basically, this is how much they use to basically like run stuff. Operating income, this is how much they make to run stuff. This net income is what they have after all of this is calculated. So, hey, this isn't the whole thing. But basically, on the financial statement, you can see basically everything they have about the company. And oh, market cap means there's 451. Wow, that's a big number. 451,199,989,663 shares on the market. So they split their company in that many little parts. And the PE ratio is, if you bought the whole company, it would take you 50 years. 50 years to pay it all off. So may or may not be worth it.
Wow.
Yeah. Where is the controls? There it is.
Half a century.
Yep. So Google, that's interesting. Which Google? Because there are Class A shares for the rich people and Class C shares for the not too rich people. P ratio is 21. You would
1.5 trillion.
21 years to pay it off. Yes. They split their company into 1,512,754,808,655 shares. They cut their company into that many parts. Just to give you a scope of how big that is. Hundreds, thousands, millions, billions. I have no idea why Yahoo is my browser. What? That's crazy. Hold on.
What? Only 24,000?
Yeah. Wait. Oh, okay.
Oh, 40,000.
Okay. Wait, hold on. How big was that number? 1.5, 500 billion, 100 billion, 0 million, 0,000. Okay. Inches to miles.
11 M.
Oh yeah, that's what I did. Hold on. So basically, I just want you to know how many shares that is, and why they're separated into different classes. So they have more parts of their company. It's not just this. Oh, that's ironic. I'm using Google to show you how big Google is. So if we start in, I don't know, somewhere in New York. Kilometers, yes, kilometers indeed. 381. 38 million. $38 million. So basically, if you've got a big cable and you wrapped it around the Earth 200 times and cut it up into that many portions, each portion would be this big. Around the Earth 20 times or 200 times. That's how big it is. And that's not all of their company. Even that multiplied by the length of the Earth times 200 is still 2,000. That's how much money they make. They make a lot of money because everybody uses Google, which I guess isn't surprising. Well, it is surprising, the sheer amount.
Wow, this is a big red candle right
Uh-huh. Everybody's been having big red candles in April. It's because that's a little bit after when the war started, and
there. Yeah.
because gas prices and stuff have been falling, so have these prices. So let's take a look at their income statement or fundamental data. Yeah, for its price, Google has a surprisingly good P ratio, mostly because it's a big company. Oh yeah, Google owns Android.
And also 1.5 trillion is only class A.
Yeah, it's only class A.
Oh,
Class-
what about class B?
Class B is for the people who don't have that much money. So they have a little bit more of their stock actually. And then they cut it up into even smaller portions that are worth less. So its earnings per share are $113 every share. And its total revenue is $257 billion. So, well, that's before they convert it and stuff. So it's pretty amazing. Google is a very, very big stock, very big company. Tape. So tape is a little harder to place because, well, sorry guys, we don't have much time. So I'm gonna wrap this up in about 5 minutes. So Alvin and Ethan, you guys are gonna get a big kick out of this. It's called Investopedia. I'm sure you've looked at it before. We're using it right now. Why do I sound like a YouTuber? If you go to simulator, click on simulator. It'll ask you to log in. So please make an account and log in.
Wait, right now?
Sure, if you want. So you'll see this page. I'll turn off dark mode so you guys can see it. Alvin and James, you have, no, not James, Ethan. Ethan, you guys have seen this before. We are going to play a game. I'm sure you guys like games. If it will load.
Why does it have a leaderboard and stuff?
Huh?
Why does it have like
Leaderboard?
what kind of game is this? Is it a stock finding?
It is a stock game. So basically, you use virtual money. It's not real money because you owe me $10,000. But basically, you invest stocks in real time.
Okay, so like real stocks, but not real money.
Real stocks, but not real money.
That's what I said.
Yeah, yes.
Except in the opposite order. And also it's 8:10. Or not.
Yeah. I'll wrap this up really quickly.
And
So
starting.
we'll ask this question later because this question might kind of come in with the next one. So basically your homework is to find 2 or 3 stocks and invest them in the simulator. If you have trouble, no worries. You can always do it tomorrow. My games.
Investopedia or whatever.
But basically, if you look up mine, you'll find a game that says 2022 Summer Investment Camp. The password is never going to give you up. No spaces, no caps. Do you guys like the password?
What is the password of Summer Investment Camp?
Summer Investment Camp, yeah, it's the name. Well, you guys have to make an account. So James, you might want to ask your parents. It's totally free. No need for any credit card stuff. It's 100% safe. I've used this before. I am not doing a network error. This is not a paid promotion, YouTube. I don't know these people. I just use their stuff.
Hey,
Also,
I know what-
I made $300 already. Just look up Investopedia.
and I'm actually already on it. but except I don't-
You're on it? Did you log in? Or did you make an account?
What? I don't actually have an account.
Okay, that's normal. Most people don't. So
That's why I'm
go
making
make an account or ask your parents to help you make an account.
no.
So Alvin, you already have an account. The name is 2022 Investment Summer Camp. It's on the board.
but 1 second.
So find it and
It's
join.
not showing up.
That's
Nothing shows up.
Oh, it's because the market is closed. I think.
Oh, no, I can't find the camp.
Really? Maybe I'll just make another game, or well, I've already made money, so
Alfred is never gonna give you up.
yes,
So I'm gonna go write that
like
down.
the song.
Oh wait,
Uh-huh.
it says I have a network error.
Oh yeah, me too. Maybe it's just our internet. So guys, make the account. It's all right if you don't. Take a look at this. It's called 2022 Summer Investment Camp.
I think
It
it's
is-
Investopedia's
Yeah.
problem.
Yeah, it's probably Investopedia's problem, actually. And the description is actually, make sure Atticus is your instructor. And the password is never going to give you up. No spaces, no caps.
Can you remind us this next time?
Yeah, of course. She gets it. So thank you for coming to this meeting. You guys can leave now, or you guys can stay and ask me questions. If nobody wants to stay, then I'll end the meeting right now.
So the name is Summer Investment Camp, and So it's and so there are spaces and caps.
Yes, I believe so. And the description says something about me too, so. The password is never gonna give you up. So if there are no more questions, have a good day